3 years ago, a government agency best known for stealth aircraft and early internet research made a bet almost nobody outside a narrow circle of physicists took seriously. It bet that a working, genuinely useful quantum computer could exist within a single decade, not several. This summer, that bet started visibly paying off, not in a laboratory, but on a stock exchange. And the man now running the program says something even bigger than that is coming next. For years, quantum computing carried a specific kind of reputation inside government and financial circles. Technically fascinating, perpetually promising, and perpetually 20 years away from mattering. DARPA decided, deliberately and methodically, to test whether that long-standing reputation was actually true. What's happened since is starting to look less like a research experiment and more like the early innings of an entire new industry finding its footing, backed by the one institution in the country, with both the expertise and the credibility to make that footing mean something. Most people who have followed quantum computing headlines over the past decade have grown accustomed to a particular rhythm. A bold announcement arrives, drawing enormous attention for a news cycle or two, followed by a quieter period where skeptics pick the claim apart, and the promised timeline quietly slips further into the future. That rhythm has repeated often enough that a healthy dose of public skepticism toward any new quantum computing claim has become almost the default, reasonable posture. This particular story does not fit that familiar rhythm cleanly at all, and understanding exactly why requires looking past any single announcement and instead at the accumulating pattern of what has actually happened across an entire government program over the past 2 years. Here is where this chapter of the story picks up. In 2024, DARPA formally launched the Quantum Benchmarking Initiative, a program deliberately built around a single, brutally specific question. Not whether quantum computing is merely interesting, not whether it might someday change the world, whether any company in America can build a fault-tolerant, utility-scale quantum computer, meaning one whose computational value to the economy actually exceeds what it costs to build and run by the year 2033. Now understand why that framing matters more than it might sound like on first read, because it strips away almost everything quantum computing companies typically get to hide behind. Not qubit counts, not laboratory demonstrations, not carefully worded press releases, just one blunt economic question with a hard deadline attached to it. That kind of economic framing is unusual enough inside the world of scientific research funding that it deserves its own moment of attention. Most government-funded technology programs historically have measured success against purely technical benchmarks, faster processing speeds, higher qubit counts, lower error rates, milestones that sound impressive in a press release, but don't necessarily translate into anything an ordinary taxpayer, investor, or business leader could actually evaluate for themselves. QBI's entire design deliberately avoids that trap by anchoring its central question in economics, whether the computational value produced exceeds the cost of building and running the machine. DARPA built a framework that resists exactly the kind of technical obfuscation that has allowed so many previous quantum computing claims to sound impressive without ever being pinned down to a standard an outside observer could meaningfully judge. Now understand how the program has moved since it started, because the trajectory itself tells a story. Nearly 20 companies entered the earliest stage of evaluation back when this entire program first launched, spanning nearly every serious quantum hardware approach under active development anywhere in the country. 11 survived long enough to reach the year-long, deeply technical second stage, where they had to lay out detailed research and development roadmaps, identify every serious risk standing between them and a working machine, and specify exactly what prototypes they would need to build to prove those risks could be managed. 2 companies, Microsoft and PsiQuantum, pursuing wildly different physical approaches to quantum computing, advanced further still into the program's final validation stage, where more than 50 independent government quantum experts are now working to determine whether those companies' machines can actually be built and operated as designed. That 11-company Stage B cohort itself spans a genuinely diverse cross-section of the American quantum computing industry. Companies pursuing superconducting circuits, trapped ions, neutral atoms, silicon spin qubits, and photonic approaches, each betting on a different underlying physical mechanism to eventually deliver the same ultimate goal. Watching one member of that cohort, Quantinuum, reach a major public market milestone while the group's 2 most advanced members simultaneously navigate the more demanding, more scrutinized terrain of Stage C validation offers a useful snapshot of just how differently the same underlying government program can play out for companies at different stages of their own individual development, even while all of them remain formally part of the exact same evaluation pipeline. But that's not even the part of this story that just changed. Because in June of 2026, one of QBI's 11 Stage B companies did something none of DARPA's quantum bets had done before. It went public. Quantinuum, the trapped ion quantum computing company headquartered in Colorado, priced an initial public offering of 28 million shares at $60 each, an offering so oversubscribed by investor demand that the company upsized it before it even hit the market. Read that again slowly, because a quantum computing company successfully completing a major, fully underwritten public stock offering at a moment when the broader technology investment climate has grown considerably more cautious about speculative, pre-revenue bets, is not something that happens without real, credible signals of technical progress backing it up. It is worth putting that IPO in context against the broader recent history of quantum computing companies attempting to access public markets. Several earlier quantum computing companies entered public markets through special purpose acquisition vehicles, rather than traditional initial public offerings, a route that historically comes with looser scrutiny and lower institutional confidence than a conventional, fully underwritten IPO process. Some of those earlier public quantum computing companies subsequently faced exactly the kind of skeptical short seller reports and credibility challenges that have made institutional investors wary of the sector as a whole. Quantinuum's decision to pursue a full, traditional IPO priced through conventional underwriting and subject to the more rigorous disclosure and due diligence standards that process entails, and to see that offering oversubscribed enough to warrant upsizing before trading even began, represents a meaningfully different, more conventionally credible entry into public markets than much of the sector has managed before it. Now think about what Quantinuum's presence inside QBI's Stage B roster actually means for how investors, bankers, and public market analysts evaluated that IPO in the first place. Quantinuum did not walk into its public offering carrying nothing but its own marketing claims about its technology. It walked in carrying an active, ongoing validation relationship with the single, most rigorous, most skeptical technical evaluator in the entire United States government, an evaluator with no financial stake whatsoever in whether Quantinuum succeeds or fails. That is not a detail investment banker's or the institutional investors who oversubscribed this offering would have overlooked while deciding whether to underwrite and then buy into one of the first major pure-play quantum computing IPOs of this scale. DARPA's ongoing scrutiny functioned, whether officially intended or not, as a form of independent, government-grade due diligence that private markets simply cannot replicate on their own. Now, let's talk about the actual physical machine Quantinuum has spent years building, because its own technical profile helps explain exactly why that market confidence existed in the first place, rather than arriving purely as a function of favorable market timing. The company has commercially deployed multiple generations of quantum systems built on what's called the QCCD architecture, a trapped ion design where individual charged atoms are moved or shuttled between different functional zones on a chip, allowing the system to separate the tasks of storing, moving, and manipulating quantum information rather than cramming every function into a single fixed location. Quantinuum has pushed that architecture to what it describes as the industry's highest average 2-qubit gate fidelity, the specific measurement that indicates how reliably a quantum computer can perform its most basic 2-qubit operations without introducing errors as of the end of 2025. The company also already maintains active commercial engagements spanning pharmaceuticals, materials science, financial services, and both government and industrial markets, relationships that predate its IPO and that suggest genuine paying customers exist for this technology today, not merely a promise of customers arriving once the hardware someday matures. Now think about why that particular design choice, moving individual ions between functional zones rather than fixing them permanently in place, matters so much to the broader question of scalability that DARPA's entire evaluation program is ultimately built around answering. A quantum computer's usefulness depends not just on how many qubits it has, but on how reliably those qubits can be entangled, measured, and reset without accumulating errors along the way. By physically separating the zones where ions are stored from the zones where they're actively manipulated, the QCCD architecture allows engineers to optimize each function independently, rather than accepting the compromises that come from trying to do everything in one fixed location. That architectural flexibility is part of why Quantinuum's technical roadmap has attracted the kind of sustained institutional confidence from both DARPA's evaluators and now from public market investors that its recent IPO reflects. Now think about what happens next for the 10 other companies still sitting in QBI's evaluation pipeline, because Quantinuum's successful IPO does not exist in a vacuum, isolated from the fortunes of everyone else still working through this same demanding multi-year process. It sets a precedent, a proof point that the broader investment community can point to when evaluating whether other quantum computing companies deserve similar public market confidence. Every one of the remaining Stage B and Stage A companies, spanning superconducting circuits, neutral atoms, silicon spin qubits, and additional photonic approaches distinct from PsiQuantum's own bet, now has a concrete recent example demonstrating that surviving DARPA's rigorous evaluation process can translate directly into serious public market validation, rather than remaining a purely theoretical possibility discussed only in investor pitch decks. That is not a guarantee any specific company will follow the same path. It is, however, a meaningfully low barrier than existed before this summer, a template other companies' own investment bankers can now point to directly when building the case for their own eventual public offerings. But that's not even the biggest structural change happening inside QBI right now, because alongside Quantinuum's IPO, the program itself just underwent a leadership transition that signals something important about where DARPA believes this entire effort is heading next. Joe Altepeter, the physicist who built QBI from scratch and who spent years publicly describing himself, half jokingly, as the program's chief quantum skeptic, is departing the agency. Taking over as managing director is Micah Stoutamore, and the language Stoutamore has used since stepping into the role marks a genuinely notable shift in tone from his predecessor's carefully guarded skepticism. Leadership transitions inside high-stakes government evaluation programs like this one deserve more scrutiny than they typically receive, because the person running an assessment this consequential inevitably shapes, even unconsciously, how aggressively that program pushes companies to prove their claims and how much benefit of the doubt gets extended when results sit in genuinely ambiguous territory. Altepeter built his entire public reputation around radical, institutionalized doubt, an approach that served the program well during its earliest, most vulnerable years, when establishing credibility with a historically overhyped field required demonstrating, unmistakably, that DARPA would not simply rubber stamp whatever claims companies brought through the door. That founding skepticism is precisely what makes the program's current, more confident tone under new leadership meaningful rather than simply convenient. Stoutamore is not starting from scratch, building credibility from zero the way Altepeter had to. He's inheriting an already established reputation for rigor and choosing from that position of earned credibility to signal genuine optimism about the underlying goal. Now read this next part slowly, because coming from the person now running the single most rigorous quantum computing evaluation program in the United States government, it carries a different kind of weight than an optimistic quote from any individual company's own marketing team ever could. Stoutamore has stated publicly that it now seems likely someone will build a utility-scale quantum computer by 2033, while adding that it remains genuinely unclear exactly which team or teams will actually get there first. That is a meaningfully different posture than the program's founding tone. Altepeter built QBI around institutionalized doubt, a default assumption that every company's claims deserved skepticism until proven otherwise through rigorous, independent testing. Stoutamore is now running that same program from a starting point of qualified confidence that the underlying goal itself is achievable, even while maintaining real uncertainty about which specific architecture will ultimately cross the finish line. That distinction between doubting whether the goal is achievable at all and simply not yet knowing which specific company will achieve it, represents a genuine inflection point in how the government itself now talks about this technology. A program that spends its founding years asking, can this be done at all, and then transitions to asking which of these several credible paths gets there first, has effectively already answered its own hardest, most fundamental question, even while the remaining, narrower question of which specific team wins stays genuinely open. Now here's what happens next, in the most literal, concrete sense, because DARPA did not simply issue a confident statement and move on. It backed that statement with action. In March of 2026, the agency issued an entirely new solicitation, opening a fresh round of Stage A evaluation specifically targeted at companies and architectures that have not yet been assessed under the QBI framework at all. Abstracts for this new round are due by the end of July 2026, with full proposals required by the end of September. DARPA has been explicit about its reasoning for reopening the earliest evaluation stage rather than simply narrowing its focus further onto the companies already furthest along. The agency wants to make sure it has genuinely assessed every viable pathway toward utility-scale quantum computing, not just the pathways that happened to apply first, back when the program launched in 2024 and the field itself looked meaningfully different than it does today. The specific timing of this new solicitation is worth dwelling on for a moment because it lands at almost exactly the same time as Quantinuum's IPO and the broader leadership transition, a convergence that is unlikely to be entirely coincidental. Reopening Stage A immediately following the program's first major public market validation sends a deliberate signal to the broader quantum computing industry that DARPA's evaluation pipeline remains genuinely open to new entrants even as its most advanced companies begin producing visible, real-world results. That signal matters enormously to smaller, earlier stage quantum computing companies that might otherwise assume the program had effectively closed its doors around its existing roster of 11 stage B companies and 2 stage C finalists. Instead, the message being sent is closer to the opposite of that assumption. The earlier stages of this pipeline remain a genuine active opportunity, not a closed competition that newer, later arriving companies have already missed their chance to enter. Think about what that expansion actually signals, because it cuts directly against a narrative some might assume follows naturally from Microsoft and PsiQuantum's advancement to Stage C. If DARPA believed the winning architecture had already been identified, reopening Stage A to entirely new entrants would make little sense. Instead, the agency is doing something more sophisticated. It's running 2 parallel tracks simultaneously, pushing its most advanced, most promising bets toward final validation while simultaneously widening the base of the pyramid beneath them, ensuring that if either or both of its current frontrunners eventually encounter an unexpected technical wall, the program still has a deep, continuously refreshed bench of alternative approaches under active evaluation. Now consider what kind of companies and architectures this new solicitation is specifically designed to attract. The quantum computing field itself has kept evolving rapidly, even in just the 2 years since QBI first launched, with entirely new hardware concepts and refinements emerging from university labs and startups that either didn't exist yet or weren't mature enough to compete seriously back in 2024. Neutral atom approaches have advanced considerably. Novel error correction techniques, including approaches that encode quantum information using continuous variables rather than simple discrete qubit states, have matured from theoretical proposals into working laboratory demonstrations. DARPA's new solicitation is explicitly designed to pull in exactly these kinds of newer, previously unevaluated approaches, rather than allowing the program's evaluation pipeline to calcify around whichever architectures happened to be most mature at the exact moment the original call for applications went out. This kind of deliberate, ongoing openness to new entrants reflects a broader lesson DARPA appears to have learned over these first 2 years of operation from watching how quickly this specific field can shift beneath its own feet. A hardware approach considered speculative or immature in 2024 can, within just 2 years, produce genuinely credible laboratory results, backed by peer-reviewed publications and working prototypes, results serious enough to justify entry into a rigorous federal evaluation program that didn't previously have room or reason to consider it. Locking QBI's evaluation criteria in place based purely on the state of the field as it existed at the program's 2024 launch would have risked exactly the kind of institutional rigidity that has historically caused government technology assessment programs to miss genuinely promising later emerging approaches simply because those approaches arrived on a different, less convenient timeline than whatever happened to be fashionable when the original program was first designed. Now, here's the part of this story that connects directly back to what happens next for the broader American quantum computing industry as a whole, beyond any single company's fortunes. DARPA's own public messaging has repeatedly emphasized that QBI was never designed as a competition, intended to crown one single winner among its many participants. The program's stated goal has always been comprehensive verification and validation, rigorously communicating trustworthy, independently vetted results to the rest of the federal government, so that other agencies, other branches of the military, and other parts of the broader American technology and investment ecosystem can make informed decisions about where to direct their own resources without each individually needing to reinvent the same exhausting, expensive technical due diligence process from scratch. Think about how much that centralized validation function actually saves, at a system-wide level, across the entire American economy. Without a program like QBI, every individual pharmaceutical company, every defense contractor, every state pension fund considering an investment in quantum computing would need to build its own internal technical expertise, capable of separating genuine progress from convincing hype, an enormously expensive, duplicative undertaking that most organizations simply aren't equipped to do well on their own. DARPA's rigorous, centralized evaluation effectively externalizes that due diligence burden, producing a trusted, independently validated signal the rest of the economy can build on top of. The same way Quantinuum's own investment bankers almost certainly leaned on QBI's ongoing scrutiny when building the credibility case for this summer's IPO. This externalized due diligence function carries particular weight for smaller institutional investors and mid-sized companies that lack the internal physics expertise, larger. Organizations like major pharmaceutical companies or defense contractors can afford to maintain in-house. A regional pension fund manager or a mid-sized manufacturing company evaluating whether to begin exploring quantum computing partnerships does not have the resources to independently verify whether a given company's topological gap protocol or trapped ion gate fidelity claims, or photonic error rates genuinely hold up under rigorous scrutiny. What they can do, however, is check whether that company has successfully navigated DARPA's own multi-stage evaluation process using that government validation as a proxy for the kind of deep technical verification they could never realistically perform themselves. That proxy function, quietly, may end up being one of QBI's most economically significant contributions to the broader American quantum computing ecosystem, even though it rarely gets discussed in the same breath as the program's more headline-grabbing Stage C validation work. Now think about what genuinely happens next for Microsoft and PsiQuantum specifically, the two companies currently sitting inside Stage C, because their path forward looks meaningfully different from the rest of the fields, shaped as much by outside scrutiny as by their own internal engineering progress. DARPA's independent verification and validation team is now actively working through the hardest, most consequential phase of the entire program, determining directly whether each company's utility-scale quantum computer concept can genuinely be constructed as designed and genuinely operated as intended once it physically exists. That process does not move quickly, and it does not move on a predictable public relations timeline. It moves at the pace of careful, adversarial, independent technical verification, the same painstaking process that, in Microsoft's case, has already become entangled with a separate, serious, peer-reviewed scientific dispute over whether its core underlying physics claim even holds up under outside scrutiny. That overlapping timing is worth sitting with for a moment because it captures something important about where this entire industry currently stands. In the very same season that Quantinuum's IPO delivered a genuine, concrete market validation of DARPA's broader quantum computing bet, Microsoft's own advancement through that identical program has become entangled in a formal published scientific challenge questioning its foundational claims. Both of these things are true, simultaneously, inside the same evaluation program in the exact same handful of months. That is not a contradiction. It is exactly what a genuinely rigorous, high-stakes technology validation effort should look like from the outside. Messy, uneven, producing real winners and real unresolved disputes side by side, rather than a smooth, uniformly triumphant narrative arriving all at once. Think about how differently this entire story would read if every single company inside QBI's pipeline had simply sailed through with universal praise and zero friction along the way. That kind of uniform, frictionless success would, ironically, be a warning sign rather than a reassurance, suggesting an evaluation process too lenient or too eager to validate ambitious claims rather than genuinely stress testing them. The fact that this same summer produced both a triumphant public market debut and a serious, unresolved scientific credibility dispute within the exact same government program is precisely the kind of mixed, honest outcome you would expect from a process actually doing its job rigorously, rather than one designed primarily to generate positive headlines for the companies and the government agency involved. Now here's what happens next for the roughly 10 companies still working their way through Stage B, the companies that haven't yet reached the dramatic milestones Quantinuum, Microsoft, and PsiQuantum have all separately achieved this year, whether through a public offering, a Stage C nomination, or the added, more complicated distinction of finding themselves at the center of an active, peer-reviewed scientific dispute. Every one of those remaining companies is now operating inside a meaningfully changed competitive landscape compared to when they first entered the program back in 2024 or 2025. Public market appetite for quantum computing investment just received a genuine concrete proof point. DARPA's own institutional confidence in the underlying 2033 goal has visibly increased under new leadership, and the technical bar for eventually reaching Stage C, given how much scrutiny Microsoft's own advancement has already attracted, appears to be rising rather than loosening, even as the program simultaneously widens its net to bring in entirely new competitors through this summer's fresh Stage A solicitation. That combination of rising expectations and expanding opportunity creates a genuinely interesting strategic position for companies, still working through the middle stages of this process. On one hand, the path towards Stage C validation now looks more consequential and more scrutinized than it did before Legg's critique of Microsoft's data became public, meaning any company advancing to that final stage should expect its own claims to face comparably intense, comparably public technical examination. On the other hand, the broader appetite for quantum computing investment, both from DARPA's own continued funding commitments and from the public markets Quantinuum just successfully accessed, appears to be growing rather than contracting, giving genuinely credible companies more avenues to translate technical progress into the resources needed to keep pushing forward, even before they reach the program's final, most demanding validation stage. Think about what all of this suggests for the shape of the next 12 to 18 months across the broader quantum computing industry. a window that should prove unusually eventful, even by this field's already fast-moving recent standards. More companies currently sitting in Stage B should reasonably be expected to reach their own Stage C decisions during this window, producing additional data points, for better or worse, about which specific architectures DARPA's own independent evaluators consider genuinely credible candidates for reaching utility-scale operation by 2033. Additional companies, buoyed by Quantinuum's successful template, may pursue their own public offerings, particularly ones that can point to their own active QBI participation as a form of independent third-party technical validation. And the newly reopened Stage A solicitation should, by this fall, produce a fresh cohort of companies and architectures entering the earliest stage of evaluation, widening the field again, just as the leading edge of that same field narrows toward its most consequential, most rigorously tested final decisions. Now, here's the part that should stay with you longer than any single company's stock price or any individual technical milestone. 3 years ago, betting that a genuinely useful quantum computer might exist within a single decade looked, to most serious observers, like exactly the kind of overconfident prediction that has embarrassed this specific field again and again for the better part of 30 years. DARPA made that bet anyway, structured it around brutal, economically grounded verification rather than marketing-friendly milestones, and staffed it with a program manager whose entire professional identity was built around skepticism rather than enthusiasm. That bet has not been definitively proven right. Nobody, including DARPA itself, is claiming certainty about which specific companies or architectures will ultimately deliver on the 2033 goal. But the bet is visibly, measurably starting to pay off, not through a single triumphant announcement, but through the accumulating, unglamorous evidence of an entire ecosystem maturing in real time, a company successfully going public, a program, expanding its evaluation net with genuine institutional confidence, and a rigorous adversarial scientific process working exactly as intended, sorting genuine progress from convincing hype in full public view. It is worth remembering just how unusual it is for any single government research initiative to produce this many simultaneously visible, independently verifiable signals of real-world traction within only its first 2 years of operation. Most ambitious federal technology programs take considerably longer, often a full decade or more, before producing anything resembling a genuine market-facing outcome like a successful public stock, offering from one of their evaluated companies. QBI achieving that milestone this early in its life cycle, while simultaneously expanding its evaluation pipeline and navigating an active scientific credibility dispute involving one of its most prominent participants, suggests a program moving at a pace considerably faster than the historical norm for this kind of high-stakes, deeply technical government initiative, whatever the eventual outcome for any individual company involved turns out to be. And here is the quieter, more interesting question this story leaves sitting underneath all of it. If a single government evaluation program can meaningfully move public market confidence, attract an expanding pool of serious technical competitors, and shift its own internal institutional tone from guarded skepticism to qualified optimism, all within roughly 2 years of operation, what does that suggest about how quickly the remaining uncertainty around utility-scale quantum computing might continue to resolve from here? And nobody can answer that particular question with full confidence just yet. But for the first time in this field's long, frequently disappointing history, the institution best positioned to know is signaling, through its actions as much as its words, that the answer might be arriving faster than most people currently expect. Consider, finally, what all of this actually means for anyone watching this space from the outside, without a direct financial or professional stake in any single company's success. The next 18 months should bring a genuinely unusual density of concrete, checkable milestones for a field that has historically specialized in vague, distant promises rather than near-term, verifiable outcomes. Additional Stage C decisions. A freshly expanded Stage A cohort emerging from this summer's solicitation. Quite possibly additional public offerings, following whatever template Quantinuum's own successful IPO establishes for the rest of the sector. And, almost certainly, additional scientific disputes and challenges of the kind currently playing out around Microsoft's claims, the natural, healthy friction that accompanies any field finally being held to genuinely rigorous adversarial standards of proof, rather than simply taken at its own word. If this is the kind of story you want to keep catching before it becomes mainstream news, make sure you subscribe, because the next chapter of this program, the fall's newly expanded Stage A cohort, the next Stage C validation decisions, and whichever company follows, Quantinuum's lead into public markets next is already quietly taking shape inside a government evaluation process most people will never think to follow until the headlines catch up months from now. Whatever happens next, one pattern about this entire story is already worth remembering. The most important signals in this industry are rarely arriving through a single dramatic press conference anymore. They're arriving through the accumulating quieter evidence of an institution putting its own credibility on the line, again and again, and being proven right often enough that the rest of the world is finally starting to pay attention.